Hi, this is Dan with Alliance Mortgage, and today we are going to talk about bad credit mortgage refinances. What are bad credit mortgage refinances, and how does it affect you, and what we do, and how you could benefit from this? Take a look at it. What is a let's start out. What is a bad credit mortgage refinance? A bad credit mortgage refinance is that where you have a credit profile that you're trying to refinance a loan which does not meet the A paper lending criteria set by major banks and lenders that require premium credit or stellar credit. Most of the credit reports nowadays since 2008 are usually bad credit reports, and they have credit problems. 80% of the credit reports have some kind of a credit problem attached to it. So if you have FICO scores between 600 or 620, anything below that, that would be considered a bad credit refinance. Another thing to look for it is that the property values. If you own the property, how long you have been in the property, and what the values have been. The values have declined substantially since 2006 and are moving towards the downside. Some areas it has stabilized and start moving up, but the values of the properties are very important when you're trying to do a bad credit mortgage refinance. Loan to value considerations should be taken care of because the refinances are usually 65 to 85% usually, and the lenders can go up higher, but it depends on what you're trying to do. Either you're trying to cash out or you're just trying to do rate and term. That means that you're paying off your old mortgage and you're not taking any cash and changing the terms of the loan. Another reason is that whether you're trying to do any debt consolidation in it, and if not, then what else is the goal of the refinance? There are some reasons here, some very good reasons why you should refinance and why you shouldn't refinance. One of the good reasons is that refinancing to pay off mortgages. You may have one or two mortgages on a property, and if you refinance, you can consolidate that into one loan. And refinancing either to lower your monthly payments, which are high because your rates are adjustable and they have gone up higher. So to lower those monthly payments, that is called also a reason, good reason to refinance to consolidate debts. If you have a lot of revolving debt, credit card debt, or any other type of debt that you may have, that you can really consolidate. Refinancing to lower rates and terms, both. You're trying to lower the rates, cash flow, and you also want to change the terms of the note from 30 years so to 15 years, or 30 years to 40 years, something like that. And also refinancing if you are in a foreclosure or having any distress with the property, the loan to values on that loans are usually between 60 to 65%. So these are very good reasons for refinancing. Now let's look at it. Why, when you try to refinance, what you need to look at it, some of the things are bad credit mortgage refinance costs, because when you have proper improper credit, or slow credit, or bankruptcies, or charge off, the credit costs, the cost of a refinance could be substantial. The lenders could charge you from 2 to 3 points, and plus the title, escrow, and other fees that go into it. Then you have to really do is do a cost and benefit analysis. What are the costs involved, and what benefits you're going to drive out of those costs? If the costs are substantial and the benefits are less, the refinance does not make sense. And when should you refinance? When should I refinance? Well, it all depends on what your goals are. If you want to refinance and pay off, and what your financial situation is. If you're trying to pay off some of these loans, then yeah, you could refinance and consolidate debt. Some people have what you call getting rid of PMI, because PMI is private mortgage insurance. Now, PMI could be attached to old loans that have been sitting there for many years and they have not been removed, and so you could refinance that and lower that. Usually that happens to A paper lenders and so on and so forth. Now, you could have been an A paper lender and now it has become a C credit or D credit, and you still can get rid of that by refinancing if there's enough equity in the property. Changing your monthly payment, that should be the goal of all the refinances that are really taking place. So these are basically, in nutshell, is the reasons that you can refinance, or the reasons why you should be considering refinancing. If you need more information, please go to alliancemtg.com and you could find a lot more.